If you're receiving Social Security or getting close to claiming it, there's a good chance you're leaving money on the table. Not because you did anything wrong, because the Social Security Administration has rules that work in your favor and nobody told you about them. Today we're going through 3 specific phone calls you can make, what to say when someone picks up, and what to ask for. Real information, no runaround. Let's start with what most people don't know. The SSA manages dozens of benefit types, adjustments, and corrections. Most people claim their benefit, get their check, and assume that number is fixed forever. It isn't. Your benefit amount can be recalculated, corrected, or supplemented, sometimes significantly, if you know what to request and who to ask. These 3 calls work for different situations. One is for people who claimed benefits early and are now regretting it. One is for widows, widowers, and divorced spouses who may qualify for a higher benefit based on someone else's work record. And one is for anyone who worked while receiving benefits and may have money owed back to them. Let's go through each one. Call 1, the recalculation request. Every year you work and pay into Social Security, the SSA records your earnings. Your monthly benefit is based on your 35 highest earning years. If you have fewer than 35 years of work history, the SSA fills in the gaps with zeros, which pulls your average down. But if you kept working after you started collecting benefits, those new earnings might be higher than some of your older years on record. When that happens, the SSA is supposed to automatically update your benefit calculation. Sometimes they do. Sometimes there's a delay. And sometimes the update doesn't happen at all. This call is about making sure your record is accurate and your benefit reflects your most recent earnings. You call the SSA directly at 1-800-77-21213. You tell them you want to request a benefit recalculation review to confirm your most recent work earnings have been included in your primary insurance amount. Ask them to verify the 35 years being used in your calculation. Ask if any recent tax year earnings have been posted to your record. If they haven't been applied yet, ask when that update will occur and request a follow-up notice in writing. This matters most if you worked in 2023, 2024, or 2025 while receiving benefits. The IRS sends earnings data to the SSA, but there can be a lag. If your recent earnings were higher than your lowest recorded years, your monthly benefit should go up. That adjustment is permanent. It applies to every check you receive for the rest of your life. Even a $40 or $50 monthly increase adds up to $500 to $600 a year. Over 15 years, that's real money. You do not need a lawyer for this call. You do not need to hire anyone. You call, you ask, and if an adjustment is owed, the SSA is required to make it. They will also back pay you for any months the higher amount should have applied but didn't. Keep a written record of the date you called, the name of the representative, and what they told you. Call 2, the survivor and spousal benefit check. This is the call that helps the most people and gets made the least often. If you were married, are currently married, or were divorced after at least 10 years of marriage, you may be entitled to a benefit based on your spouse's or ex-spouse's work record, not just your own. This is called a spousal benefit or a survivor benefit, and the rules around it are more flexible than most people realize. Here's the situation that catches people off guard. You may have claimed your own Social Security benefit years ago. You're receiving that amount every month. But if your spouse or former spouse had significantly higher lifetime earnings than you, their benefit record might support a higher monthly payment than what you're currently receiving. The SSA will not automatically switch you. You have to ask. For people who are currently married, if your spouse's benefit is more than double your own, you may qualify for a spousal benefit equal to up to 50% of their full retirement age benefit. If you claimed early, that amount is reduced, but it may still be higher than what you're currently receiving. For widows and widowers, the rules are different and often more generous. You may be able to receive up to 100% of what your deceased spouse was receiving, or was entitled to receive. Divorced spouses are often the most surprised by this. If your marriage lasted at least 10 years, you are divorced, and you have not remarried, you may be entitled to a spousal benefit based on your ex-spouse's record. Your ex does not have to have claimed their own benefit yet for you to claim on their record, as long as you are both at least 62. Your claim does not affect their benefit or their current spouse's benefit in any way. Call 1-800-772-1213 and tell them you want to request a spousal or survivor benefit eligibility review. Have the following information ready: your Social Security number, your spouse's or ex-spouse's Social Security number if you have it, the dates of your marriage and divorce if applicable, and your spouse's date of birth or date of death. Ask the representative to compare your current benefit amount to what you would receive under a spousal or survivor claim. Ask them to tell you which is higher and whether switching would require any waiting period or reduction. If you were widowed and haven't yet looked into survivor benefits, this call is urgent. Survivor benefits can begin as early as age 60 or age 50 if you have a qualifying disability. Many people don't know that and wait until 62 or later, missing years of payments they were entitled to. The SSA cannot pay you retroactively beyond a certain window, so the longer you wait to ask, the more you may permanently lose. This is also the call to make if your spouse recently passed away and you're still receiving your own benefit. The SSA does not automatically switch you to the higher survivor benefit. You must report the death and apply for the survivor benefit as a separate step. If you don't do this promptly, you may continue receiving a lower amount and miss out on the difference. Write down everything from this call. Get a confirmation number. If the representative tells you that you don't qualify, ask them to explain specifically why and ask what documentation you could provide to support a reconsideration. Call 3. The earnings test adjustment. This one applies to people who are under their full retirement age and worked while receiving Social Security benefits. There is a rule called the retirement earnings test. In 2026, if you are under your full retirement age for the entire year, the SSA withholds $1 in benefits for every $2 you earn above $23,400. If you reach full retirement age during the year, the threshold is higher and the withholding rate is lower. Most people who hit this situation feel penalized. They see their checks reduced or stopped, and they assume that money is gone. It is not gone. Here's what the SSA does not explain clearly. When you reach your full retirement age, the SSA recalculates your benefit to give you credit for the months your benefit was withheld. Your monthly payment goes up permanently to reflect those withheld months. But here's the problem. That recalculation is supposed to happen automatically when you reach full retirement age. Sometimes it doesn't happen correctly, sometimes the adjustment is smaller than it should be, and almost no one calls to verify it. This third call is to confirm that your full retirement age adjustment was calculated correctly after any period when your benefits were withheld due to the earnings test. Call 1-800-727-1213. And tell the representative that you had benefits withheld under the retirement earnings test in a prior year, and you want to confirm that your benefit was correctly recalculated at full retirement age to account for those withheld months. Ask them how many months of benefits were withheld, what adjustment was applied to your monthly benefit as a result, and when that adjustment took effect. If the adjustment was applied correctly, you'll have confirmation and peace of mind. If it wasn't applied correctly or wasn't applied at all, you may be owed a benefit increase going forward, and potentially a back payment for the months you received less than you should have. This is not a small issue. If 4 or 5 months of benefits were withheld and your benefit was never adjusted upward, you could be receiving $80 to $150 less per month than you are entitled to. That adds up to over $1,000 per year, every year, for the rest of your life. Before you make these calls. A few practical points to make these calls go more smoothly. The SSA phone line is busiest on Mondays and the day after federal holidays. Wednesday and Thursday mornings tend to have shorter wait times. Call early, ideally before 10 a.m. local time. Have your Social Security card or number written down before you call. Have a pen and paper ready to write down the name of the representative, the date and time of the call, any reference or confirmation numbers, and exactly what you were told. You have the right to ask for a supervisor if a representative is unable to help you or gives you an answer that doesn't seem right. You have the right to request a written explanation of any determination. And if you disagree with the decision the SSA makes, you have the right to appeal. Appeals must typically be filed within 60 days of receiving a notice, so don't wait. If you have trouble navigating the phone system or feel uncertain about how to phrase your questions, you can also visit a local SSA office in person. Bring photo ID and your Social Security number. You can find your nearest office by going to the SSA's official website at ssa.gov and using the Office Locator tool. What these calls are really about, the Social Security system was designed to support you. The money in it came from your paychecks and your employer's contributions year after year across your entire working life. You paid into it. You earned what you receive, and you are entitled to receive every dollar you are owed. The problem is that the system is complicated, understaffed, and often slow to make corrections on its own. The SSA is not trying to cheat you, but they are not going to proactively search your file for errors or unclaimed benefits either. That responsibility falls to you, and the only way to exercise it is to call, ask the right questions, and follow up in writing. These 3 calls are not about gaming the system. They are about making sure the system is giving you what you already earned. A recalculation of your benefit based on recent earnings, a review of whether a spousal or survivor benefit would give you more than your current benefit, and a verification that your benefit was correctly adjusted if it was ever withheld under the earnings test. None of these calls cost anything. None require an attorney or a financial advisor. They require your time, your Social Security number, and the willingness to ask. If even one of them results in a benefit correction, the impact on your monthly income could be substantial and permanent. Make the calls, take notes, follow up if needed. You've earned it. Social Security rules are complex and individual situations vary. For personalized guidance, consult a Social Security benefits counselor or elder law attorney. You can find free counseling through your local area agency on aging.